U.S. government just officially lists silver as a critical mineral, and China is now limiting exports moving forward. There is a battle going on, not only to drain the world's exchanges slow enough as to not cut off your nose to spite your face so everything blows up. And now you have governments acknowledging that this is more about policy now, not just national security and policy on top of the battle between the industrials and the investors. It's setting the stage. And when you realize just how small of a market cap silver has, I don't tell people to buy silver to get wealthy, but it has enormous upside if you realize that you start throwing government money into this and putting a floor under it and limiting exports. Yeah, the potential for silver is quite enticing. I mean, you could argue it's parabolic.
The global silver market may be on the verge of a historic shift. Precious metals expert Andy Schectman explains how new government actions and tightening global supply chains are pushing silver into what could become a parabolic phase. The U.S. government has now officially designated silver as a critical mineral, signaling rising national security concerns and acknowledging its essential role in technology, energy, and defense. At the same time, China is beginning to restrict key silver-related exports, adding even more pressure to an already strained global supply. This isn't just geopolitics. It marks a new era where government policy, industrial demand, and investor interest are all colliding. According to Schectman, silver's market cap remains incredibly small relative to the potential capital that may soon be funneled into it. Once governments themselves begin competing for supply, the floor under silver becomes stronger. Volatility increases, and upside potential expands dramatically. With industrial needs rising, export limits tightening, and official policy now supporting the metal, silver could be entering one of the most explosive setups in decades. A moment investors can't afford to ignore. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in. Now listen to the interview.
China, the world's largest silver refiner, is restricting exports and has announced that starting in 2026, all silver exports will require individual government licenses, effectively giving Beijing full control over every ounce leaving the country. This move classifies silver as a resource of national interest, signaling a strategic shift towards state-managed supply. And then at the same time, you got the U.S. adding it to the critical mineral list. This is no coincidence, and it's a battle for the world's supplies of things that are critical to infrastructure, critical to military, critical to a world that is digital. It is, you need silver to transmit electricity across, long distances. You need silver, and I think that's becoming. I think that's, for semiconductors and electric vehicles and defense and solar panels and on, I think that's becoming clear. Massive amounts of gold and silver dropped in what's called the access market. It started anyway at a period of time in between New York closing and Asia opening. There's no liquidity in the market there. And when this happens, it would be the worst possible time to ever do it. In fact, there wouldn't be a trader on the planet that would ever do it. If they did, they would be fired and shot, and probably not in that order, as you're dumping copious amounts of gold and silver onto the market when the New York traders are gone for the day and there is no liquidity in the marketplace. And it hits stops because there's no one there to fill the order, so it just triggers stops all the way down. It's a drive-by shooting. The interesting part about it was that Michael Lynch, I believe is his name, I think that's his name, an analyst who talks about the COMEX, says, there was interesting movement when the price got slammed down. Two American commercial banks came in and bought massive amounts. It was Bank of America and Morgan Stanley. They came in and literally silver went right back up, and gold came up about halfway because it had hit so many stops on the way down, where funds that use algorithms to, trigger sell limits or sell orders just fall. But the interesting part about Morgan Stanley and Bank of America is you have the chief investment officer, of course, of Morgan Stanley. It's well known now, that said, sell half your bonds and put 20% of your assets in gold. And then Bank of America lead analyst Michael Hartnett is saying, yeah, make that 25% in gold. And so these two banks came in and gobbled it up. But when you look at how this has tremendous strength and resiliency, I look back over my career, Adam, and any time that the market got hit this hard, they'd step on its neck and it would never come back.
Right.
Everyone was saying, this is it, it's over. Gold broke 4,000, silver broke 50, the bull run is over, sell your gold. You look at the central banks, and their numbers are usually backed up a little bit, but in September, they bought 39 tons of gold, which was up 79% month over month, and it's the highest month of reported net buying in 2025 so far. And you're continuing to see massive amounts of gold bought across the board. You look at Tether. Now, I've talked a lot about Tether and their role in the stablecoin legislation and how they are buying gold and Bitcoin with their profit. Their numbers on their third quarter balance sheet are almost 13 billion in gold. They're buying gold hand over fist.
Wow. When
they issued these stable coins, to back whatever it is that they're doing, they're backed by U.S. Treasuries, and the interest on those treasuries is not transferable moving forward. And they will put more and more into gold. They were just at the Beaver Creek Mining Summit, so they're dealing directly with the miners now as well. And so I think whether you're talking Tether or the central banks or the massive deliveries into COMEX or the massive deliveries in Shanghai, at the highest level, you're seeing a quiet rush for physical possession, huge amounts. And I don't know, I just think that this inventory problem will only get worse. Now, it's ironic that we haven't seen it as much on the retail level, but we're beginning to in certain areas.
Leading precious metals analyst Andy Schectman outlines what may be the most significant transformation the silver market has seen in decades. China, the world's largest silver refiner, has announced strict export controls beginning in 2026. Every ounce of silver leaving the country will require a government-issued license, effectively placing Beijing in full command of outbound supply. This decision officially elevates silver to a national strategic resource. At the same time, the United States has added silver to its critical minerals list, confirming a global policy shift rather than coincidence. Governments now recognize silver's essential role across defense, semiconductors, EVs, solar, and long-distance electrical transmission. With both superpowers tightening their grip, the battle for physical supply is accelerating. Schectman highlights unusual trading activity as massive gold and silver dumps hit the low liquidity access market, moves no normal trader would make, triggering stop-loss cascades. Yet what happened next was even more revealing. Bank of America and Morgan Stanley stepped in and bought aggressively, sending prices sharply higher. These are the same institutions whose top strategists now recommend allocating 20–25% of portfolios to gold. Meanwhile, central banks continue their historic accumulation, with September marking the strongest month of gold purchases in 2025. Even stablecoin giant Tether now holds nearly $13 billion in physical gold and is working directly with miners to secure more supply. Across COMEX, Shanghai, and global vaults, the quiet rush for physical metal is intensifying, and the inventory squeeze may only get worse from here. Let's get into the interview.
Of the 850 million ounces mined last year of pure silver, there was only roughly 20% of that, 170 million or so, that came from companies mining silver. It's so hard to find the deposits because they're right near the surface. The big deposits were found forever ago. So First Majestic, I believe, is the purest of all the silver companies in terms of their just being a silver company. It represents 50% of what they do, but
right.
It's becoming really hard to find, is the bottom line, the big deposits that have already been exploited. So most of what comes to market is byproduct mining of other minerals, and they stumble across it. There's some institutional traders that see a massive breakout in gold in the next few weeks. I'm not saying it's going to happen, but we just saw a $96 million coordinated call block, it's called, just hit GLD, which with calls expiring in December. This means that an institutional investor or multiple funds in coordination just bought roughly $96 million worth of GLD call option. And a call option profits when the price goes up. And with the December expiration, they're betting gold rises within weeks before those options expire. And when you call it a coordinated block, this means that one or several large orders are placed together. And this suggests intentional institutional positioning, not retail speculation. So in plain English, this means that someone with some serious capital believes gold will move sharply higher soon to put a $96 million bet on it. And then you look at the deliveries we've seen in October, which is a pseudo delivery month in gold. It's turning out to be maybe the third largest delivery month in all of 2025, and it's not even a primary delivery month for October. And November deliveries are again, as I mentioned, off to a big start. December is the big one, where both gold and silver are delivered in December. So it might have something to do with that and how much of it will be delivered. Mm-hmm. It may have something to do with the Fed pivoting and lowering rates again. I mean, all I can tell you is that everything that I see is very bullish, and I try and be as open-minded as possible. I'm not married to the bull. I just simply think when you look at the positioning of the biggest money in the world and all the actions going on by the governments around the world, it's hard not to be when you look at this from a big picture.
When you step back and look at the entire landscape, from China's tightening silver exports to the record central bank buying, the surge in physical deliveries, and now coordinated institutional bets, the message is unmistakable. The world's biggest players are positioning ahead of a major shift in precious metals. Pure silver production continues to shrink, with only about 20% of annual supply coming from true silver miners. The rest is trapped in byproduct mining, where discoveries are increasingly rare. This is happening at the same time that institutional traders just placed a massive $96 million coordinated call block on GLD, signaling a belief that gold could break out within weeks. Add in unusually strong delivery months on COMEX, a potential Federal Reserve pivot, and unprecedented sovereign accumulation, and the setup becomes clearer. The people with the deepest pockets, the most data, and the longest time horizons are preparing for higher prices. And tightening physical markets are reinforcing that direction. No one can say the exact moment the breakout happens, but the signs are lining up in a way we haven't seen in decades. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.